watching Stockwatch with me, Simon Brown, and joining me to unpack your stock-related questions, Ricus Reeders, PSG, hole-in-one, Ruimsig. Be sure to send your questions through. You can email us, stockwatch@bdtv.co.za, SMS 41392, or on Twitter at BusinessDayTV, #Stockwatch. Ricus, appreciate the time. Unfortunately, our second guest suddenly couldn't make it, but you and I can talk markets for days and days, I suspect. I want to start with commodities because, I mean, I know that for us, it's year end and stuff, but for commodities and miners, it's just another, a calendar in a sense. Commodities really have sort of continued where they left off, and in fact, in some cases, gotten stronger. I mean, PGM's had a really, really good December and into Jan.
Yes, same with gold pushing to new highs. I mean, if one just takes a look at the Bloomberg Commodity Index, which is a nice collection and almost appropriately weighted index of commodity prices, including soft, that's looking to push to new highs. So there's no, just because it's the end of a calendar year, it doesn't seem to be the end of a cycle. Yeah, it still looks good. I was looking at the price graph of Thungela just before we got on the show, and I thought, wow, as much as I dislike being in resource counters because they're also cyclical, it's still looking fairly positive.
And a lot of what drove it last year, and if I think particularly gold, the year before, gold's run, which has been going on, I mean, it remains, central bank worries around inflation, central bank independence, et cetera. I don't know that we're going to see another 2025 where gold almost doubled in the year, but all those momentums that we had last year are still in place broadly.
And possibly increasing as far as the geopolitics are concerned. Mm-hmm. I mean, China's central bank 14th month of increasing their reserves, and that's just based on the increased political risk associated with having your assets in dollar if you're not a U.S. citizen or a U.S. government, and that's not going to decrease. I mean, we've had the Americans now laying criminal charges against Jerome Powell last night. And Jerome Powell, for the first time ever, directly addressing Trump and saying, you are interfering politically in what is supposed to be an independent situation. That all increases that uncertainty, and I think that's why he's seeing this continued push in gold as a safe haven, silver doing its mad thing, and platinum pushing towards new highs as well.
What is the silver story? Because I have to be honest, I paid little attention to it. The move kind of caught me by surprise, and then I thought it was finished. It got to 50. Turned out that was just the warm-up. I mean, obviously there's some increased demand for it. Is it still just a very low liquid market and therefore sort of prone to these type of moves?
It's always been prone to that. It's always been a bit psychotic because of that. And we used to sit with the historical situation that there was lots of silver above ground, and every time you see this kind of run of the silver price, everybody takes their granny silverware and go and pawns. But that being said, certainly over the past, shall we say, decade, the fact that silver has gone from a uniquely interesting metal as far as its chemical properties are concerned, including great connectivity for electricity, for example, all of a sudden you've got solar panels coming in, where there's a real demand, catalysts, where there's a real demand. So all of a sudden, rather than just being a fringe industrial metal, it's gone to being an important industrial metal. And I think that's part of the move we've seen. And then, as you've said, just the fact that that at the margin, what the next person is prepared to pay for it, you can have this extreme volatility.
Yeah, yeah. I mean, you talk about your grandmother's cutlery. Literally, my sister has it, and I got her to weigh it, and it's quite a bit there, and at $70, $80. Yeah, it's proper money. Let's get some corporate action. We had Glencore and Rio Tinto, a merger takeover, call it what you will. As I understand, this really creates it creates a powerhouse in the copper and iron ore space. Then
Yeah,
we've got, it's going to be giant, and it's going to be another sort of adding the iron ore sorry, the copper to Rio Tinto.
yes. I mean, leader in iron ore, and certainly a powerhouse as far as copper is concerned. Um, I don't know how to interpret this, but we've had the Anglo and Tech merger of equals, and now we've got this. So I think one has to be aware that this type of consolidation starts happening at the top of cycles, which I don't say this is the top of the cycle, but watch out for people starting to overpay as this bull run continues. But as we've said at the start, just looking at the price momentum of things, the underlying drivers, we might be at very high prices, but as long as your momentum continues, that by definition is what a bull market is.
Yeah.
It's prices going up, and you might think they're overvalued, but it's not. The market doesn't think so, and don't disagree with the market. Just follow it.
Yeah, I don't stand in the way in the market. Does this leave BHP Billiton maybe a little bit the odd one out? Because they tried to get the Anglo assets for the copper. They're the light on copper. They're the ones who sort of all the iron ore, and that might be a bit of yesterday's metal. Is BHP in a tough spot here?
I don't think it's in a tough spot, but I think the culture of Billiton is probably a little bit different from Glencore, Rio Tinto, specifically Glencore, which is always open for deals. So the fact that there's a bigger competitor doesn't really matter that much as long as your demand holds up. I mean, it's not because they don't set the price of what they sell.
Yeah.
It really is a question of efficiency and getting the stuff to market. In a sense, it might be a blessing in disguise. So Billiton can concentrate on mining rather than on trying to merge two operations, which is always fraught with difficulty.
Yeah, it's actually a fair point. They can kind of stick to their knitting, and maybe that puts them in a slightly better position. Let's touch on some of the sort of late last year. As I say, before we came on, I was saying this is my first day back, and I'm still trying to find everything that happened. Aspen, fairly, certainly the market liked the deal, selling assets, getting a 20 plus billion, I'm not sure how much after their tax payment. On paper, a good looking deal, but doesn't maybe solve their big problem, which is that they've got those sterile facilities down in Choppies and in France, which are not being utilized. How much do you think it fundamentally changes the Aspen story, assuming the deal happens?
I think I mean, not an expert on Aspen because I've been leaving it alone for a while. But I mean, what they're selling is about, I think, about 0.25% of their revenue, quite a big part of their earnings. So it's selling good stuff at a good price. I mean, they're not throwing it away. So it now depends on what they're going to use the money that they get for. Obviously, reducing debt, obviously getting their manufacturing this side assets working better, concentrating on as far as the weight loss drugs are concerned. So there's a lot of money to throw after assets. I just hope it's not throwing money after bad assets. But at least it puts some pressure, or it gets some pressure off what has been a pretty tight cash flow situation.
Yeah, absolutely. And I think sale prices, I mean, it's almost their debt, whether they use it for the debt or not, but it is almost. And then the one that sort of broke just as I was going on holiday last year, Mr. Price. Is it a horror deal, or is our market just, please, no more offshore adventures?
Yeah, it's well, the market hates it. I've been quipping that Mr. Price should now be known as Harry Price, considering what they've just bought. It seems, yeah, it's market doesn't like it, and I think part of the market not liking it is Mr. Price, although they've said they're going to have a investor roadshow to explain the thinking behind it, but it's a communication problem as well. You wake up one morning and all of a sudden you're in a very not profitable German retail business, and you think, why? And it just sort of from management is, well, because we think it's a nice idea. Until we've got, I think, more information from management side as to how this thing is going to work, market's going to be very wary of what's happening.
Yeah, it was, and I watched some of their webcast when they announced it, and I got to say, I just thought management was so defensive from the get-go, almost as if they were by then they knew what the price action was, but they haven't sort of taken us into their heart. Cell C listing, an initial pop on it, come back to a degree. What's your thinking on Cell C, and another telco on our market?
Yeah. Asset light telecoms business, which is almost it sounds weird, but they are obviously offering their services on the back of the infrastructure of existing companies. So in that sense, it's an interesting model. Still doesn't make them a big player in the market, and the rule of thumb as far as telecoms are concerned, always be invested in the number one or number two. So I think it's an interesting spec, and it's going to be interesting to see what they're going to do forward. But then taking a look at that sector in general, I mean, locally, apart from the resource sector and to a certain extent property, it was telecoms that did a lot of the running in the index last year. That's Vodacom, Telkom, MTN, and those three still look very good. So my question is, why would you sort of be out of Vodacom, MTN, or Telkom and go into Cell C? Maybe you can add Cell C as an interesting play in that sector, seeing that the momentum in that sector is still positive, even though we've had a very good year last year.
Yeah, but I like your point. You typically want number one or two, and Cell sees many things, but I don't think they're one or two. Ricus, I want to get to some of the questions coming through, and I'm going to start with actually it was the best moving stock last year on the JSE, Choppies. I mean, I know what they do. They're kind of the Checkers of Botswana, but they're about the size of the Checkers in Rosebank. I mean, they are tiny. I mean, is this just, again, a low liquid? I mean, I don't even know if you've had a look at it at all, if there is anything there. I mean, they didn't publish results for years on end at one point.
I had a look at the share price mid last year. I thought, wow, this looks interesting. And then, next time I looked at them, they were trading at about R4 or something ridiculous. I'm not sure what they're at. So to tell you the truth, haven't followed it. They listed. It sounded like a very good idea, but then there was some corporate actions and heaven knows what. Even I think I drove past one Choppies store at some stage, and as you said, it's low end of the retail market. But to tell you the honest truth, no. Apart from a really amazing price graph, and not on little volume either. There has been a consistent acquisition of this. It's, I think, one of those gems that we just undiscovered, maybe as they refocus back to Botswana. But yeah, no, as to what's driving it and what the prospects are, I have no idea.
Yeah, as well. I mean, as I said, they didn't publish results for literally years, and at that point, I took my eye off them. And they were trying some expansion. I liked them more when they were kind of northwest Botswana, Zimbabwe. That seemed to work really well for them. Question coming through around PGMs. Volterra generally the preferred. Does that remain the case for 2026? Volterra has been, and Ricus, I'm not sure if I'm putting words in your mouth, but typically the preferred PGM miner. Would you concur with that?
For me personally, yes. And when I say personally, I mean for my client's portfolio in the sense that um, I'm probably a little bit more conservative than I would be for my own personal portfolio. So Valterra, yes, considering the quality of their operations and their reserves. And certainly on a technical basis, the price still looks pretty good for at least a short-term run to about 1,700. But if you want to look for more speculative plays, I think Sibanye is interesting, not because I'm a great fan of them operationally, but specifically because they're, apart from Russia, the only other miner that's really got assets outside of South Africa and in the US. They might have a political advantage in that sense, seeing that it is a strategic metal for the US, and they might get preferential treatment as far as their operation is concerned. Who knows what the US administration will do, but that's the type of thing they will do.
Yeah, I agree with that. It's sort of in their playbook. And of course, then they've got some gold as well. One around Pepco, which is, I know, the one that you do like. And if I look at the chart, I mean, it's kind of flat over a year. Of course, it's been all over the place, but that was markets. But now that it's sort of back at the sort of mid-20s and the like, still offering value there.
I think so. And considering the rest of the companies in that sector, whether it be Fashini's and Mr. Price, thank heavens that is flat over the year. I wouldn't say it offers value, but I think it's at a decent price. And if one takes a look at what happened with the local industrials end of last year and even the beginning of this year, I think, or at least from my side, I can notice the usual suspects moving up in the industrial space. And by that, I mean those industrial companies of which the market cap is big enough for outside, in other words, offshore interest, to start buying in. Because emerging markets in general remain positively viewed. If I take a look at the various recommendations from offshore brokers as well as institutions.
That's a great point, because that was the one thing last year. I mean, the US had a great return. I mean, I think the S&P was what, call it 16-odd%. Yep, yeah. That's a good number for 1 year. Of course, that pales into significance what Brazil did, what South Africa did, what Mexico did. And my sense is that the emerging market, and certainly if we look at our market, is perhaps still early days, because foreigners are buying our bonds, but they haven't really arrived at our equity yet.
No, they haven't. Except, as I've said, the little spurt of buying in that we've seen were concentrated in things. On the day, Bitvest, whoops, it goes up, and that's not only local buying, that will be offshore buying. So and that's just putting my technical hat on and looking at what moves specifically on positive days. You get this feeling that it's offshore buying in not necessarily the cheapest or the most undervalued shares, but those shares which can be bought by offshore money because of size.
Yeah, they're simply just big enough and emerging market enough to qualify. What about Sasol? Question coming through, worried about oil, worried about the Venezuelan oil coming to market. I think we are way away from Venezuelan oil coming to market at this point in time. But Sasol, for you, I mean, oil, briefly, Brent was below 60 last week. It's now back, 62, 63. But I mean, that oil chart does not look thrilling to me.
It doesn't at the moment. It's staging a bit of a recovery in a downtrend. The one major factor that has changed over the past month, 2 months, is not Venezuela. It's what's happened with the taking over of the shadow fleet tankers. I think it's 4 at this stage. It has reduced the ability of India and China and Russia to do oil trade outside of the, shall we say, the petrodollar system. And that doesn't mean that the demand from India and China is all of a sudden slack. They still need the oil. but it's now more difficult to use your shadow fleet because they are in danger of literally being taken over by the US Navy. So it forces China and India to consider having to pay not $50 a barrel or $40 a barrel if you buy from Venezuela or Russia, no, or Iran, those which are under sanctions, but actually buying closer to, buying in the normal market, Brent, Texas.
Yeah.
That could change the picture as far as the oil price is concerned going forward in the short term, 3-4 months, which will be good for Sasol. And my thesis on Sasol, at least PSG, thought on Sasol was that even without a oil price increase, Sasol is basically valued or priced at breakup value. Therefore, there should be upside on any positive news, whether it be operationally from Sasol's side, or an increase in the oil price, or even just better chemicals prices or spread prices at least.
Gotcha. And I hadn't thought of that. I mean, you take a couple of tankers out and it does change the game. And that they're not just sort of somewhere easy replaced. Question coming through around banks. They did all right for me last year. Dividends remain good. Do we continue to hold in 2026? Because our banks have moved. They certainly have. But I don't think they're looking expensive at this point, and they've still got good yields.
I think it's a perfectly decent hold. If you're underweight, I think you can go full weight. If you take the look at the various prices, First National's pushing towards a new high. Standard Bank is at a new high. Netco was disappointed. I've been surprised by Aspen. I was too negative on that specific bank, and that's pushing to a new high. And Capitec is doing its Capitec thing. So price momentum is on your side. They're not expensive. And still pretty good yield. So in that sense, still pretty good value. You get a bit of a GDP growth kick and it will be even better value.
Yeah, yeah. And ABSA is finally coming to the party. It's been a lagger for I don't know, almost I think for as long as I've been doing stuff, ABSA has been the lag. And as you point out, Capitec, well, it's just Capitec. Question coming around Alphabet. It boomed on me, did what I thought would take 3 years and sort of 3 months. Ricus, I mean, this is some of the hard parts of investing. When you get an investment thesis, you buy the stock, it goes up 60% in a short period of time. Often, I don't know, to your point, if the momentum is still there, and I think Alphabet has perhaps got it, and certainly the stock, it was cheap. I don't think it's expensive. Maybe it's fair value now.
Yeah, that's, how shall I put it? It is in my offshore portfolios. It's now my biggest holding by mistake almost. No, not by mistake. I thought it was pretty cheap 4 or 5 months ago.
Yeah.
And we've had a great run. And I think with reason, if you take a look specifically at their Gemini model, what's happening with automation as far as Wigo Way or whatever it's called. As far as application of AI technology is concerned, I think it is and remains my preferred stock in that space.
Yeah, and absolutely. And I mean, it was on a PE sub 20 at some point last year, and Gemini has absolutely, after a bad start, has leapfrogged. And to be clear, others will leapfrog, lots of moving, but for now, Gemini's and is absolutely it. Ricus, let's get our first stock pick of the year. You're going with Siemens.
Yeah, we were talking about Google on the front edge of AI and the use of AI. Siemens is more on the back end of that, and it's to do with what they've been doing for a very long time, which is called smart factories, where they use automation to make buildings work better. Now, with the addition of AI to their bouquet of services, they've just, for example, closed a deal with NVIDIA for which not only helps with the automation of a plant, but also using AI to make sure that your energy use is as efficient as possible. That's just on the factory space. They're doing the same thing with grids. Eskom not that Eskom, or they would go to Eskom and say, we're going to use AI together with our expertise in managing big electrical grids. to make it more efficient. And I'm not even talking about what's happening on the health side of things, where that same AI influence is starting to help with the machine that does an ablation for your heart, for example. So it's a company that's got the expertise in making machines work smarter, now incorporating AI into their business. I don't think they're expensive from a historic price of about 26, and I think people are underestimating the type of revenue and earnings growth they can get from real productivity gains using AI rather than imagined AI productivity gains that a lot of people are thinking as far as the workplace is concerned.
Yeah, no, I take your point.
These guys are engineering stuff. They, stuff using AI, not merely, making your email look better.
I was going to say, or how to roast your carrots. I mean, the important things in life. This is the real McCoy.
Yes.
We'll leave it there.
Yeah.
That's thanks to our guest, Ricus Reeders, PSG, hole in one Ruimsig. Up next, the close.